10% do, which about 40% of you got right. Imagine that, only 10% of policymakers, politicians, local leaders, and governments even appreciate that there is a difference in such a way that they're doing something about it. That's why we're having this conversation, because while we can debate or even disagree on the definitions of these things, the fact of the matter is they're not the same. And so if we approach them through policy or regulation or public funding as though they are the same, we're not helping people. We're just not, right? At the very least, we need that expertise in place so that people understand how deep tech is not the same as an AI startup, and that's not the same as a small business that's getting off the ground, right? These are different challenges that we have to face.
Welcome everyone from throughout the world. Welcome for my part to Austin, Texas, where it's warm, thankfully, even though it's January in the United States. Welcome back to many of you. I appreciate you continuing to join us. Founder Institute's been hosting talks like this a couple of times a month, if we can, covering economic development questions, ecosystem development questions, really exploring the depth and breadth of startups and venture capital, given in particular the fact that if we don't help our founders and entrepreneurs be much more successful as innovation continues to accelerate at a faster pace, we're going to be in some trouble. We've got to start creating more companies, more businesses in our communities. And the best way to do that is to best understand these distinctions that we're going to talk about today. As I was thinking about this conversation, I wanted to throw out a different perspective for you all to think about. And if you would, chime in the chat with any questions that you have, and chime in with your perspective on this question that I'm about to offer before I get our conversation started. I was thinking about whether or not there's a good way to appreciate whether or not your local leaders, your local government, whether or not your state or country, whether or not your community actually understands and appreciates the distinction between small businesses and startups. And what occurred to me, and I'll be frank, I threw it in AI just to figure it out. What occurred to me was an interesting question would be whether or not your universities and your community colleges actually even teach venture capital. Not startups and entrepreneurship, but venture capital. Let me know in chat if yours do. What I found from AI is, in fact, in the United States, only about 10% of the universities even bother to teach how venture capital funding works, which poses this question that we're going to talk about. Is that a good reflection of the fact that we don't understand that startups and small businesses are different? That indeed, if we're teaching finance, if we've got people in MBAs, if we're teaching banking and investing, we consider that good enough for people to become angel investors or venture capitalists, which I hope you know is a completely different form of investing and a completely different approach to the risk tolerance and experience that's needed to be an effective investor. I'm Paul O'Brien. Welcome back again. This is Founder Institute's set of conversations about entrepreneurship and economic development. I'm the head of public affairs, government relations, and our work in public policy for Founder Institute, trying to help you all work through these very kind of questions. Joining me today is someone I'm very excited to talk to because he, like me, has played a role in, it appears to be about a half a dozen different ecosystems throughout California, Arizona, Ohio, both Los Angeles and San Francisco or Silicon Valley in the Bay Area. So Gil is certainly someone who has a depth and breadth of perspective on different communities and the perspectives that they have on small business development, perhaps workforce development, and indeed what it is that we mean when we're talking about startups. How are you, Gil?
I'm doing well, thank you. I'm here in beautiful Barberton, Ohio. Unfortunately, it's a little bit chilly here, but happy to be here, and thanks for the invite. I'm looking forward to this discussion. It's something obviously you're passionate about, and I think it's very timely. So I'm passionate about it as well.
Let's start with that. I would love it if you would give everybody a better sense for why we wanted you to join us. You've done a lot of work in this regard, both at a legislative level, in some governor's offices, and even in a consultative level. So give us a little bit more depth about yourself. And then what I'd love to start with is that question. Why are we passionate about this? And so again, everybody in the chat, everybody in the audience, throw questions at us, add your perspective there. We're definitely going to bring up some questions that you might have as we go today. But let's get into Gil's background and let's get into why it's important that we have passion for this question. Gil, tell us a little bit more about yourself.
Yeah, so I'll just thumbnail sketch of my background is I'm born and raised in California, raised in the Central Valley, attended college in Claremont, California, which is just outside of Los Angeles. But my first official job outside of college was working in the state legislature. I received a fellowship, which turned into me becoming a legislative director for a freshman state senator. And then that's really what got my first taste into quasi-government, but also private sector activity, economic development. I'd go on to spend some time as a senior advisor to the mayor of Los Angeles, Mayor Villaraigosa, who's now running for governor in California, and then served as an appointee to Governor Brown in the state of California, responsible for economic development throughout Northern California, which of course included Silicon Valley, etc. As you said, I spent some time as vice president of economic development at the Arizona Commerce Authority, which was a great experience. They have an amazing group there. We could chat about what they're doing right there, and I think that's kind of applicable to this conversation. But then I think most importantly is I had a VC-backed venture company, or a VC-backed fintech company called Subsidy, which I launched with a gentleman who was from Google and another gentleman who had a big data company that was acquired by Pandora. Three of us teamed up, raised $3 million from Homebrew, Box Group, and some other folks, and scaled a fintech company to democratize government incentives for America's small businesses. That company was acquired about a year and a half ago by a national tax firm. And since then, I kind of went back into community development, workforce development, really ecosystem building. And again, we'll chat a little bit more about what that sounds like and what that means to myself and also just kind of to the group here in Ohio, and really enjoying it. That's how I came across Founders Institute. I obviously have known of y'all. I've known of Founders Institute for years, but I really appreciate what y'all are doing on the ecosystem development side, especially working with state and local governments, because that is critical. And as we chat, we'll probably have some differing opinions about this, but probably the ringing fact that I'll state is having experts in the room at the table is so critical, regardless of small business or VC-backed companies, et cetera. And obviously FI is doing that. That's not to brown nose, but again, I've seen what you've done, and it's important and it's needed. So we want to do more of it.
Cheers to that. Of course, the rub that everyone has to struggle with is what exactly is an expert, and who are those experts in our communities. And frankly, that's why we do a lot of this. For those of you that aren't familiar terribly with what Gil's referring to, Founder Institute, of course, is known for running local chapters to develop entrepreneurs. We might be in your city. We certainly should be in your city if we're not yet. But what he's referring to is that over the last couple of years, we've pivoted rather substantially to address this challenge at the local governance level, working with economic development offices, working with city leaders, working with even legislators and policymakers to help them understand the important distinctions and roles that the entrepreneurs on the startup side of our economy play. And I've got that passion. You know, we're all working with startups, and so you all appreciate, I'm sure, that when it comes to finding a founder who is likely to be successful, this question of passion, what are you passionate about? Mm-hmm. Why are you doing this startup is really critical. So let's start with that as a framing for why we're having this conversation. Gil, talk a little bit about what got you passionate about these distinctions. Was it some challenges that you observed, or conflicts that you deserved, or is it just something you started to figure out might make a lot more sense to help develop? What led you down this path of trying to make it better at a local level to help small business owners as distinct individuals from startup founders?
Yeah, I think, I'd say first, candidly, is and this may or may not resonate with folks, but it usually comes down to personal experience and my background. I'm the first in my family to graduate college. Half of my family came from Mexico, and so I was not your traditional hey, go to high school. In fact, I dropped out of high school and obtained my GED for reasons that I won't go into here. But that really got me passionate about just kind of, forging my own path. And look, if I was going to be successful, it was really going to be up to me and the people that I surrounded myself with, and like-minded folks. And at its core, entrepreneurship and small business owners, whether you're on VC funded side or just starting up a restaurant, is you're doing something for yourself, of course, but more importantly, you're doing something for likely your family, for legacy reasons potentially. Maybe there's financial rewards that you obviously you hope to reap, but doing something that's bigger than yourself. I think that would probably be the common theme. So, I would say that small business folks, entrepreneurs, from startup founders to the folks that have a lawn mowing business, I've always just felt that's kind of like my tribe. And I've had some experiences both on the government side, but also as an operator and co-founder and small business owner, that if there's shared resources, when you match two people who are passionate with some real hard applicable resources and tools, like that just helps with exponential growth. And again, whether you're running a service-based business, a tax firm, a lawn mowing business, or a venture capital business, of course, those are all very distinct and different, and the tools and assets and resources needed all very different, which we'll talk about in a few. But I just find myself wanting to foster that on the individual level, and then step back and see how do you build ecosystems that can feed that pipeline, support those folks, bring more entrepreneurs, startup founders into the pipeline, because as you said, we need those. And then from the policy down to the practical, technical assistance, how do I add value along that value chain? And when you see the results, it's fantastic. It's really rewarding, and it feeds into kind of my entrepreneurial spirit as well. So, so I would say that that's what I'm passionate about, is seeing folks be successful. And again, there's a good feeling that goes along with that, and a real economic impact that happens at the local and state level that you can't deny. So it's a good fit for me.
Good. Well, let's back it up a second. And again, I'd love to encourage the audience to share their answer to this one in chat with us. I'm going to share my own as well, but how would you define a startup? Let's characterize that, so we really appreciate this difference between the lawnmower business or the local accounting firm, and what we mean when we're saying a startup being distinct from that in some way. Gil, sorry, that was okay. You go, or I'll jump in with my definition. But
yeah, I mean, look, I think that there's kind of SBA-ish, government-y kind of definitions of what these are. Most governments don't speak in startup terms, as you said. They speak in small business or business terms, if you will. If you're looking at the SBA definition of what a small business is, that's companies that are under 500 employees. And that's regardless of sector or industry. It could be a fintech company, lawnmower business, attorney, whatever. So there's not much room. Well, let's just say it's a very broad brush from the government verbiage perspective. I would say myself, look, a startup at its core sense could just be anything. The business that you're starting up on the side, from a side hustle, to a service-based business, to a restaurant, to a venture capital type business. Now, of course, there's a big distinction between venture capital funded businesses and the model that's kind of baked into that, what your outcomes are, versus just your traditional small business. And I know we're gonna go through that today, but at its core, every VC backed company at some point is a startup. Every restaurant is a startup, and they kind of take on their own paths, obviously, depending on what the founders and or owners want them to be. So that's kind of what I would define. I don't know if that's accurate or not, but that's kind of how I would define it. So,
well, I don't know that we're here to discern what is accurate.
That's a discussion.
Certainly everybody has their own opinion. What I find is interesting, I'd love to draw some attention to what you shared about the SBA. And the SBA's definition of a small business is everything with less than 500 employees.
Yeah.
And part of the reason for my passion for this topic is we can even separate ourselves from this question of a startup versus a business. Part of my passion for this topic is that let's be frank about the fact that a two-person local accounting practice is not remotely the same as a 500 employee construction company.
Correct.
That even in the sense of those being small, we're creating challenges in our ecosystems and our economies because we're not being more discerning. And who's got the right definition is a very valid question.
Yeah.
But we do have to appreciate that, you know, a two-person lawn mowing business or even a restaurant is not going to get venture capital.
Correct.
And so one of the challenges that I find that we struggle with at the angel investor level or the venture capitalist in the venture capitalist ecosystem is that you get this investor community that kind of weaves itself together because everybody wants to help startups. That you get a lot of business investors, you get a lot of real estate investors who want to be a part of the startup ecosystem. And the challenge of the reality is they're not familiar with how these things work. They're familiar with how businesses work.
Yes.
And so I've done some work with the SBA. I've got a paper with the SBA. Everybody, if you'd love to see it, we'll dig it up and make sure it's sent back out. I got a paper with the SBA exploring things like how SBIR grants, SBIR grants, for those of you who are not in the United States and aren't familiar, that's funding from the federal government that's available. SBIR grants are framed as or positioned as in the United States available to anything new. R&D or startups or new businesses. And hopefully you can appreciate how that raises a lot of questions as to whether or not those grants are being allocated effectively when those are three completely different kinds of things. Do we have the right experts in place, to use what Gil referred to previously, to make sure that we're helping people as best as possible, as most effectively as possible? I see a couple of definitions here. I'm going to read one of them because I think it's a good one. But I'd love to add, for the sake of the conversation, my definition comes from Paul Graham, who 15 or 20 years ago characterized a startup this way: it's a temporary venture in search of a new business model that is scalable, competitive, and valuable. And I think that's a really fascinating way to put it, because what he was pointing out is that no business, no entity is a startup forever. None of them are. So a good distinction of a startup is actually that it's something different than a company. It's something different than an active business, because it's this unique phase where we're trying to uncover and develop something completely different than what's already available. And the idea of temporary in my mind, Gil, it's temporary because it endeavors to become a business or a company.
Yeah.
And in appreciating that, you can really start to see how local leadership or regulation or policy or government can actually kind of screw things up then, in the sense that, what does a startup first do? Well, they have to formally organize as a business, an LLC or a C Corp. So by definition, you've got a policy approach that's saying this is in fact a company. And yet characteristically, it's not at all like a company. It doesn't have a consistent org chart. It doesn't have a consistent P&L. You know, it's inventing things. It's making things up as it goes. Rohan, I wanted to call attention to your chat. Thank you for that. Drop your LinkedIn in there, by the way, so people can connect with you. It's a new young company founded by the entrepreneur to develop a unique product or service, aiming for growth by disrupting market or creating new ones. And I wanted to point his out, if y'all see it in chat, because it's that word unique that I think is meaningful. I used to give this talk about how HomeAway or a new short-term rental platform that you might be starting is absolutely not a startup now. It's just not. It's tech. It's on the internet. It's kind of innovative and interesting, but it's not a startup anymore because Airbnb already invented the category. They were the startup. It's been done. What you're doing is you're launching a new business that happens to be doing something that's similar. And so it's that uniqueness, that characterization that I think is matter and so much of a challenge for policymakers. How do you deal with things that are unique? And so let me ask you that, Gil. How do we approach our local leaders, our policymakers, the community builders, the folks who want to foster these startup ecosystems or these workforce development ecosystems or these economic development ecosystems? How do we approach them when, at the end of the day, what we're dealing with are things that are definitely more likely to fail because they are whether our definitions are on the same page or not is kind of moot. They're certainly more innovative or disruptive or newer than a traditional business. That's got to raise a lot of challenges for people who are used to working with companies and employee development and workforce development. Have you seen any good best practices for cities or people that want to help cities uh, have a greater impact on this startup side of the equation? What are the
Yeah.
tools or
Yeah.
platforms or approaches that you've seen that might be more helpful or might work? Any thoughts?
Yeah, and look, this is going to be applicable because I know we have an international audience and folks from all over, and at some form or capacity, as you said, or some structure you previously said, there's local leadership. That's usually your municipal government, your mayors, your city council, your county supervisors, etc. Then you kind of move up to your state. Let's just say the state of California, the governor's office, your state legislature. And then, of course, you have your federal entities, and whatever country you're from, at some form, you probably have some form of electeds and or folks that are interested in this ecosystem building and helping businesses grow, startups and otherwise. I'll just say, to answer your question directly, because you asked two questions. The second one, like, what are some good examples? I'll give you a really good one that's real time here in Ohio that I'm really impressed with. And I'll share some of the best practices and why I believe it's succeeding and will succeed. But more importantly is understanding the folks that are interested in your success. Let's just say let's just call it the startup success. Who are those folks going to be? Let's maybe just tackle that first. And, as we've talked before, mayors or electeds always talk about, hey, I created these jobs in this time of my administration and that sort of good stuff. And that's fine and dandy. Look, I've worked for several electeds who've claimed that, and I'm not going to say they did or did not, but what I would say, it was usually a policy, a initiative, and or a very distinct group or kind of organization that helped foster the total ecosystem for these startups to not only get started, but grow, find product market fit, and thrive. And I don't need to tell you the best example is Silicon Valley, right? That's an example has been decades in the making, and it's just a powerhouse worldwide. So firstly, again, let's talk about maybe some of the organizations from the government side of who would be interested. Most major cities have a local, let's just say your mayor. They usually have some sort of business development or economic development department. What I would say, and I'll go to my example of kind of what is a good example in a minute here, is approaching your local mayor, and they'll probably kick you over to a staff to say kind of what is there for us is just a good first step, because most of these local entities control to some degree grant funding. They have access, as we said before, to the technical resource providers that are boots on the ground that can help you. I would say, here's a question that I would ask, and I really, in my previous role, I would really encourage folks to do this, is especially if you're a technology company, your government group can be a good introduction to design partners because they have relationships with these private sector folks. And those private sector folks are usually motivated to create an ecosystem of entrepreneurship and seeing small businesses grow. So approaching your local mayor or elected official is usually a good first step, regardless of where you are, because that person is ingesting all of this information, both from the federal government, state, and then they're a good disseminator of these kind of resources to businesses. Now, it's going to be up to you to be persistent because a lot of these folks are busy. So that's firstly. So asking the right folks. What I would say is, outside of Silicon Valley, I'll give you an example, because your second question was, what are some good examples? Right now in the state of Ohio, literally in Akron, we have something called the Polymer Industry Cluster. And that is the federal government had invested some funds matched by the state government to foster further sustainability in the polymer rubber sector. Okay. And you can there's tech, it's called a tech hub. that's great and dandy, but here's where the real rubber meets the road, for lack of a better wording, is there's big companies and small companies for that matter that are opening their doors to startups and saying, we want to be your design partners, which is unheard of. Like, you have a solution or a new business that you're looking to address a problem in the polymer rubber sector. And these large companies, who I won't necessarily name their names, you can look them up yourself, are opening their doors through the vehicle of the polymer industry cluster saying, hey, yeah, come talk to us. We will be interested in being your design partners. That means that the most important factor is finding product market fit, defining your customer, right? And then working through pricing and all that sort of stuff. So in this instance, the polymer industry cluster is doing a really, really good job. And if you're in the United States, I would encourage you to look up your local tech hub, TECK hub. It's a federal tech hub designation, because there's folks that work in the aerospace, defense, works metals, AI, as well as, like I said, hard materials like polymer, rubber, like here in our backyard. So that's a really good example of what's working. We have a startup accelerator called Synth6 here in Akron through Bounce Innovation Hub. They're using some of this federal money to fund some of these tech startups. And then, of course, the most important part is these larger companies are opening their doors and saying, hey, we can devote part of our team or this staff to work on this problem collectively with you as a design partner. And between those two things, it just shortens the time frame to product market fit, getting to market, raising additional follow-on funds, and really truly creating, going from, as you define, a startup to a real company, if that makes sense.
It makes sense, and I want to weave together. Prashant, thank you for a couple of your questions. I'm gonna paraphrase them because it touches on something that caught my attention. The work being done there in polymers sounds a lot like what's emerging, everyone, in what's being referred to as a venture studio, where it's
exactly
a much more developed organization that is certainly working with other people, but also spinning out innovation. And I wanted to share that because what we've been finding is that government funding, federal funding, state funding, grants, I sort of touched on it, that's likely the least qualified to make good judgments about startups to directly invest in, right? These are politicians or policymakers. So they're not necessarily the experts, with all of the greatest respect to them. That the reason this idea of a venture studio or a tech hub is emerging, everybody, is that what can be done, though, is that public funding could be allocated to develop an ecosystem, right? Or to develop real estate or labs or the infrastructure that's needed for innovation. And we're seeing a lot of smaller cities. I was just in Abilene, Texas, for example, where they had the option to launch an accelerator or develop a venture studio. And given the size and scope of Abilene, Texas, it made a lot more sense to go the venture studio route because they have some specialties, they have some specializations. They don't necessarily have a depth of a roster of mentors and experienced angel investors that understand how to support startups. And I point that out because you did touch on accelerator, maybe taking some federal funding and allocating it to startups. Prashant, before I go on with this train of thinking, let me point out why I'm asking. A lot of founders, Gil, right, are still struggling with and asking, how and where do I raise capital?
Sure.
And a lot of my passion for this comes from that question still being incredibly persistent, because for those of us that work in startup development, who work in the venture capital community, we know the answers are pretty black and white. They're pretty straightforward. You're not getting a bank loan, for example, if you don't have assets and you don't have revenue. You're just not. So don't bother talking to a bank. On the other hand, a very quick answer to Prashant's questions about where to start is it depends on the kind of business that you're developing, which is why we're having this conversation. But it also depends on the outcome of that business. And what I mean by that is that a venture capitalist is someone who manages other people's money, frankly. They raise capital from other people or funds in order to invest it in startups, which means what? Which means venture capitalists have an obligation to return that capital, and substantially more is the idea. And so we can discern that most new businesses are not appropriate for venture capital not because they might not be successful, not because you're not making money, not because you couldn't be huge, but because in order to raise venture capital, you fundamentally must exit. You must get acquired, or you must go public, because the investors have to deliver a lot more capital back to their investors. Gil, do you get a sense for this challenge at scale? You touched on Silicon Valley. I was in Silicon Valley, everybody as well. Silicon Valley seems to work because it sort of organically, not necessarily intentionally, it sort of organically just developed this ecosystem that's ideal for startups. And what I find is that most other cities and countries are trying to replicate that without appreciating that you can't just take Silicon Valley and drop it somewhere else, right? That you get a sense for one of the greater challenges being this gap in understanding how to raise capital and where to raise capital. And do you think it's something that local leaders and governments and policymakers could be addressing more effectively to help overcome those issues, right? If you don't have VCs who know what they're doing, you might want to develop that, I think. Yeah.
Yeah, well, those are big questions. I'll go back to this. And look, I'm a first-time founder. I had never raised VC funding in my life. And what I would say is there's kind of two parts of this. One is, surprisingly, venture capital funding has so many expectations. Not surprisingly, venture capital funding, as you said, has so many expectations. Starting a business is hard. Finding product market fit is hard. Finding who your ideal customer is hard. Pricing so that you're consistent and being sticky, building a moat, all of that is hard. Layering on venture capital, which is the most aggressive form of funding a business like this, takes all of that and makes it all the more stressful. Now, I'm not going to say that that's not good, but because that's the way that venture capital is wired, and quite frankly, that's the way most of the folks who go into raising capital are wired as well. This exponential growth, trying to build a unicorn or exit, is wired into most of the folks who go out to raise venture capital, including myself and my two co-founders. So I just want to be very clear about that. Venture capital funding is not the end all be all. It sounds really awesome, and you're not saying that either, but it comes with tremendous KPIs and stressors that most small businesses don't have to deal with. So I'll just say that first and foremost. Secondly,
what if I may, I'd even interject a little bit just to have a more dynamic conversation about this, and to help Prashant and other folks who are asking about it. Appreciate everybody. Less than 1% of all startups even get venture capital.
Yep.
So we talk about venture capital a lot, but I might offer that we talk about venture capital in the context of startups a lot, because it's a way to help people understand the difference and the distinction of a startup from a small business, right? If you're opening a restaurant, you're not getting venture capital. It's not even relevant to you, right? Whereas all innovative new ventures could get venture capital,
correct?
Right, that they're sort of oriented to what's expected of that. But let's be clear, you're absolutely not likely to get it. And I'd add, even Gil, I think part of the problem, or part of the challenge in our ecosystems, is that we're not discerning this difference enough. And so you have a lot of businesses that are chasing venture capital without being told, quite simply, dude, it doesn't apply to you. Right? Like, stop wasting your time. You're not going to get it. And at the same time, we have, as I touched on, everybody, we have these other forms of investors, Wall Street investors, for the sake of a better way to put it, who want to be known as or be involved in the startup ecosystem. And so they present themselves as angels, or they present themselves as VCs, and founders, entrepreneurs, ecosystem builders. You have to help people understand that those people are not likely to understand how to invest in startups. regardless of what they call themselves. And I can call myself a VC, but if my money is all tied up in oil and gas here in Texas, odds are I don't have a clue how to invest in the next AI tech.
Yeah.
And hopefully you can see how that lack of distinction misleads people, right?
Correct.
And causes these challenges, not just in the governance context, but causes these challenges for the entrepreneurs, that they're then talking to so-called investors who actually aren't, which means they might be getting terrible advice, which means they might be then doing the wrong thing, and they're putting their business at risk because we're not drawing these distinctions better. What have you seen? Have you seen anything that can really help local leaders better understand these distinctions? Not just VC, but who should be going after SBIR grants? Who should be going after other forms of public funding? Right? Is it ideal for the next blockchain-based meme coin to chase a local grant? Right? How do we help people better understand that capital has certain purposes? It has a certain role.
Sure.
And it doesn't really get out of that box too much, right? We got to keep it in the box because that's the point of it.
Yeah. So and I want to make this pertinent or relevant to the audience, because I just don't want to sound like I'm trying to dissuade folks or say, look, VC isn't. And trust me, I heard this when I was going out to raise money. I had the stars in my eyes of raising VC money, and my co-founders were like, "Hey, this is not the solution to everything." Fortunately, we did so. So I want to make this applicable. So firstly, to answer your question is, and to maybe even make my point a little bit stronger, is that if you look at the sort of companies that are raising true venture capital, on let's just say $1 million or up, I'll just use an arbitrary number, it's much harder for those folks to raise than it was when, quite frankly, I raised 4 years ago, 4.5 years ago. So the benchmarks, the traction, the product market fit, all of it's a much harder environment, in my opinion, from what I've seen. I still have, I'm still friends with folks that were on my cap table, et cetera, to raise that sort of funding. So that's first and foremost. So just kind of put that in your back pocket if you think, in fact, you want to build a venture-backed business. What I would say that a lot of the local folks, and let's just call them just government folks, the folks that are looking to invest and build this ecosystem, is there is not much education between the difference between private equity, venture capital, a family office, an angel investor, a traditional business, and what their needs are. I think, and again, this is where organizations like Founder Institute and others are really helpful, because this is kind of a fast track to understanding that. The more that folks like Founders Institute can interact with and educate your local or state folks, like, the better off everybody is going to be, whether they engage with Founders Institute or not. That's right. Irrelevant. But that education in and of itself is tremendously valuable. So that's first and foremost. And then you asked a specific question, types of capital. We obviously, and this isn't the appropriate call, but family office money and private equity and venture capital and angel investors and grants and SBIR are all very different. What I would say as an overarching theme, as Paul, you said earlier, was SBIR, STTR is very slow money. Probably takes 12 to 18 months to get. Now, there's stages to it. You can get a first tranche of, a couple $100,000, and then it go all the way up to, $1 million or more. But in order for you to access that, one is you have to be in the United States. So those of you who aren't in the United States, it's really kind of slow. It's not going to be applicable unless you have a presence in the United States. But any of those sort of government funding, it's non-dilutive, which is fantastic, but it's going to be very slow money with huge reporting requirements and a huge time commitment right up front. So there's probably been 2 companies that I've said, hey, look, you should go apply for SBIR or STTR. Okay. So again, not to be negative, but I just want to just frame that. What I would say probably most importantly, and you all know this better than probably just as well as I do, is it's never been easier to build out an MVP than it is today with the tools that we have accessible. Never been easier. In fact, I'm doing that right now. I have an MVP that I'm going to start beta testing with folks like that, or folks that could be potentially customers. So if we're looking at sources of capital, there are local folks, and there's you'll see economic development organizations, like we said before, the PIC innovation hubs are another one. If you look in the local kind of regional ecosystem, there's usually smaller grants. Let's just say you build an MVP, you have a design partner. That's like sub $50,000, where if you need to kind of round it out by layering on some software development, etc. There are folks out there and organizations out there. Again, PIC, Polymer Industry Cluster, it's competitive, but we funded 13 businesses, or they funded 13 businesses, startups, some of which are from pre-concept to currently have a product in market, and everything in between. And those are real dollars they gave to them, with design partners tagged onto that. You could not ask for a better system than that. I mean, that's about as good as it's going to get pre-venture capital. So again, I would go back to some of the local economic development folks that are in your area. Tag folks in Founders Institute, because they're plugged into every community that likely you're interested in to some degree, if not have at least probably an arm's length relationship with somebody. And those folks will probably direct you into places where there is either non-dilutive capital or some frame of capital that will at least help you start building your product to get it to the point where you can start market testing it, et cetera.
Yeah. If anybody's interested in having that more in-depth conversation at a local level, I'll point you to fi.co/government. fi.co/government. Sana can probably drop that in chat for us, so you got the link. But we are structured to meaningfully talk directly with local leaders,
yeah.
and there's no sales pitch, there's no
Exactly.
business development behind it. We're hosting these talks. We're having a lot more of these talks throughout this year, simply given the fact that our passion, our motivation is that this should work better. I love to say that the old conventional wisdom that 90% of startups fail should be a point of disappointment for our economies, because there's absolutely no reason that 90% of startups fail. We know so much more about the kinds of people, the kinds of funding, the steps that need to be taken, the priorities that are involved. Not that we can guarantee success, but we should be embarrassed that almost everybody fails when they start a startup, because we can be doing things better. I'm going to touch on two more things that I see in the chat. And we got about 20 minutes, so I want to remind everybody to drop your LinkedIn in the chat. I also want you to take a poll that's been put up. The poll that's been put up, if you can click on the little poll icon, or Sana, maybe you can make it pop up, I don't recall. The poll that I wanted to ask you all was just to get opinions. How many countries distinguish startups from small to medium enterprises, small businesses, in their policy? So think about this. What percentage of countries throughout the world, 193, 195 countries, whatever it is now, what percentage of them are very clear in distinguishing that these are not the same things? I have the answer, so I'll give it to you, but I'm curious what everybody else thinks first, because hopefully this poll is a good reflection of why we're having these conversations and why this is a challenge. Let me touch on something that came up in the chat. Couple of questions about deep tech and IP. And by the way, Eric and Peter, I see your questions too. I want to get to that one last, because that's you both touched on something from a different perspective that is a great way to wrap up this conversation. But let me touch on deep tech with you for a second first, right? That you're right. Grants are slow money, right? By and large. And they have a lot of work associated with that. Make no mistake, everybody, raising venture capital has got a lot of work associated with it too, right? And a whole bunch of expectations associated with it. But you touched on something that's rather important to acknowledge or point out, and that is one of the most frequent questions that someone like me gets is, why isn't there a Silicon Valley in Europe? Why isn't there a Silicon Valley in Africa or Asia? Silicon Valley in culture and pace and funding, frankly, right? And the answer, by the way, interestingly, and so I'm going to be critical of grants. The answer is, in fact, that there's prolifically more public funding available to entrepreneurs and innovation. And so what happens is, in the culture of your country, everyone, if you're in those countries, What happens is when that public funding is more prolifically available, those grants are more available, two things happen. One, there's a longer lead time to get the money. You could take longer. So you aren't as aggressive about launching. You aren't putting that MVP out in place. You aren't chasing customers as aggressively. Number two, it doesn't have the same expectations as angel investors and VCs do. It's non-dilutive, which means what? Which means they don't own a part of your company. They don't expect to get a lot more back. And I don't want to characterize it as creating laziness, but it's sort of fair to say that that's kind of what happens, right? If I can get $2 million with no strings attached, I'm not likely to be as aggressive about ensuring that I can build a $20 million company that can return that to investors. That's a fundamental challenge. And the reason I bring up deep tech, Gil, I appreciate your thought about this, or university IP, right? The reason I bring that up is you're right. There are certain sectors in which we can much more quickly, affordably build an MVP or get something to market. But at the same time, there are certain sectors where we can't.
Yeah.
And
sure.
deep tech, I forget who asked the question, but it was a great question. Thank you for that. Deep tech is one of those sectors, right? Heavy research, licensing issues, IP issues, patent issues, right? You got a lot more going on there. Do you get the sense, Gil, that there's a different slice to how we might distinguish innovative kind of companies than startups versus businesses or small businesses or what have you, in this sense of deep tech isn't actually a sector. Bear with me, right? Deep tech is not like aerospace or oil and gas, where it's a clear sector of the economy. It's actually more of a horizontal, right? It's a type of stuff that's more heavily researched. Could we do a better job, do you think, of creating more distinctions, right? Does it make some sense that different sectors of the economy, different kinds of innovation certainly are better suited to different forms of capital? Because I would argue, deep tech innovators, I would argue that absolutely is somewhere that grants and public funding should be more available and chased down. Any thoughts, Gil?
Yeah, and look, we're going to agree on this, and perhaps I even contradict myself now that I'm thinking about it. So, the University of California system in California, the UC system, UCLA, UC Berkeley, just the UC system, has a prolific innovation arm to it, where the state of California, and sometimes in some instances federal dollars, are leverage to go into startups, technologies, and I'll answer your deep tech question in a second, or give my feedback on that in a second, where the research and ecosystem of the UC system is put to work with new ideas more often than not outside of the UC system, sometimes within it, to solve major problems, right? And our defense industry is a good example of that. Obviously, pharmaceuticals, list goes on and on and on. I mean, just like any traditional institution. However, the UC system gets a return on that. In fact, they have a pretty substantial equity portfolio of businesses that they team up with. And once these companies go out to market and IPO, the UC system reaps the rewards of that. And of course, so does the state of California and otherwise, taxpayers, if you will. So to answer your question, especially as we're talking to deep tech, look, that is fundamentally, it's probably the most complicated layer that you could look at, and it's moving so fast, and yet you have to be patient, and you have to have really strong domain experts from varied fields, and it seems like it is a good fit for either the government sector, like the labs. We have national labs as well, Lawrence Livermore, all these national labs, and or research institutions like the UC system. And when you combine that with private sector folks who are motivated to solve these problems, really smart, capable folks, with that infrastructure, usually good things happen. And I think we've seen that time and time again all throughout whether it's Silicon Valley or otherwise, all throughout history. So, so to answer your question, yeah, yes, SBIR and kind of governmenty programs are slow money. They can be clunky, but I would agree with you. I think if you're working in some of that deep tech sector, any of the pharmaceutical stuff like that has big, important it has really important applicability to these research institutions, which are wired and built for solving for some of these problems. And by the way, these turns into venture capital, usually, sometimes IPO, publicly traded companies. So everybody wins in that situation. So I don't know if I answered your question, but I guess it's a very long-winded yes. That would be a good kind of partner for kind of deep tech, any of these very, very complicated patient problems that we need to solve.
Patient problems is a good way to put it. Rohan, I see your question as well. Hopefully we kind of touched on it in your asking about R&D related challenges. Climate tech is a good one that's just kind of parallel to deep tech, because it's such an intensive industry that you're competing with or having to work within, that you have to be patient. You have to take longer to develop that kind of stuff. And it's those kind of things where grants and public funding are more meaningful, frankly, because yes, they could become venture capital fundable, but in the earliest stages, again, that's not the kind of stuff venture capital tends to fund, right? They're looking for the things that can scale and become big. So when you're working in deep tech or heavy R&D kind of things, you're trying to get that innovation beyond, actually even through or to the point that it actually is a startup. Right? In a sense, you're perhaps not even a startup yet, because you're developing the potential to be one. And until you get that potential developed, that something can get to market, you don't even really have a startup that might be considered by a VC yet. And so that's where you might look to public funding or different models that could help.
Paul, can I just add to that real quick? Because I think that's such a really good comment. And I want folks on this call to understand what Paul just said, and it's really, really important is, and I see Bernina mention one of the national labs. Many of these folks in labs and UC systems, they are wired for these really complicated pre-MVP problems. Okay, again, they're wired to solve patient problems. And I encourage you, usually more often than not, you're not going to find how to approach these folks on the website. You're not going to just get an email address or, run into somebody that says, hey, yeah, let me help you solve this world-changing problem. It's relationship. So I encourage you to reach out to folks like Paul or go to the FI resource page, or even myself, reach out to me, because, usually it's an introduction that you can be made, and it's not guaranteed, but at least that's how many of the innovative projects that I've seen come to life. It was just like, hey, I know these folks over here, go call them. They meet, and 6 months later they're working on a problem together. So it's relationship based versus process oriented, if that makes sense. So I just want to encourage you to reach out to folks to get those intros. Okay.
Yeah, and thanks for that, because I'd add there were a couple of questions about can FI help with. I saw one about Australia, for example. The easiest way to appreciate Founder Institute, for those of you that aren't familiar, is actually just this. We operate in about 300 cities now throughout the world. Among the big three programs, Y Combinator, Techstars, and Founder Institute, most don't hear as much or are familiar with the fact that Founder Institute is in some respects bigger than Techstars and Y Combinator. And it's because we're so spread out globally at a local level, whereas Techstars and Y Combinator are the more monolithic accelerator types. So if you're looking for this local expertise, if you're looking for local connections, if you're looking for this help at a local level, that's why we're having these conversations. Because the answer is yes. Because we're in Morocco, we're in Riyadh, we're in London, we're in Australia. I know we have a program in Sydney, and we have a program in it escapes me, but also in Australia. So we're pretty much everywhere. And again, if we're not, we want to be. So definitely reach out to us through the website or just connect with us. The poll real quick, and then I'm going to ask my final question. So if anybody's got a final question, drop it in the chat. Maybe we'll fit it in, but I'm going to have one more. The poll results. This is interesting to me. I'm going to summarize the poll results, and it's that 60% of you said that between 11% and 100% of countries do distinguish between startups and small businesses. The answer that I've been researching and I'm going to publish, maybe today if I can get around to it, is in fact only 10% do, which about 40% of you got right. Imagine that, only 10% of policymakers, politicians, local leaders, and governments even appreciate that there is a difference in such a way that they're doing something about it. That's why we're having this conversation, because while we can debate or even disagree on the definitions of these things, the fact of the matter is they're not the same. And so if we approach them through policy or regulation or public funding as though they are the same, we're not helping people. We're just not, right? At the very least, we need that expertise in place so that people understand how deep tech is not the same as an AI startup, and that's not the same as a small business that's getting off the ground, right? These are different challenges that we have to face. And so that raises up my last question for us, Gil, from the community. And this is, Peter, I'm going to weave yours together with Eric, because I think it was fascinating that you both asked something similar. We just have a couple of minutes left, so we'll be quick. Not that we can be quick with this one. But one question asks, is there a best state policy that we could put in place to enable more vibrant tech startup ecosystems? But the parallel question is asked. There can't be, right? That we have to address regulatory issues, we have to address innovation infrastructure, we have to address research institutions. Eric, you touched on this. We have to support venture development and venture capital development. We have to support different forms of capital, right? Eric, you make a great point there. And at the same time, I think it's really wonderfully intriguing. Is there something we can come up with that we could all just focus on, lean in on at the state or national level to say, please at least do this? Gil, do you have a thought? What's that one policy approach or that one best approach that you can think of that might change things or accelerate things best? Any ideas?
Yeah, and look, this will go over like a lead balloon with the feds, but SBA is wired as a debt mechanism for small businesses, right? There's not much that's entrepreneurial about it. It doesn't fit for it. Loan requirements, etc. SBIR, on the other hand, is slow money, heavily regulated, a lot of hurdles to overcome, but good. It's non-dilutive. A hybrid between the two. That's like, look, I think $10,000 to $20,000 in this ecosystem with some of the tools that we have for building companies could be game changing, right? And if it's non-dilutive, if it's innovative, if it moves faster, let's just say fast for government is less than 6 months, or let's just even call it 3 months. I think that's a pretty creative federal structure that would have huge failure rates. Like, don't get me wrong, failure rates would be astronomical, but those successes would probably far outweigh from an ROI, taxpayer ROI perspective. And I'm not saying you got to devote $50 billion to it, but look, do a small carve out with a little bit more innovative, flexible program between SBIR and traditional SBA lending. And I think you're going to see a lot more innovation that's going to have significant ROI for our economies.
I like that one. I've got one to add as well that might work. And Peter, thank you for adding this. There's a link in chat, everybody, to Jumpstart Our Business Startups Jobs Act. Take a look at that. You can appreciate that lawmakers, policymakers are trying to figure this out, which is why this is a good conversation for us all to have. Eric, thank you as well. I'll highlight this one because John Deary and Victor Huang are awesome people as well to connect with the Center of American Entrepreneurship and Right to Start. We're having conversations with both about similar topics. Here's my answer, and I'm not saying this is easy, but it might be my answer. Right? What Eric pointed out in his list of challenges, that there can't be a single policy, is the fact that regulations and innovation infrastructure and venture capital, right? There's so many different things to address, which is true, that you probably can't have a single policy initiative, and I agree. At the same time, what occurs to me is maybe full circle on what we've been talking about, and it's that traditionally universities, community colleges, politicians, local workforce development, economic development, traditionally that's all oriented to business development, business development. They understand how companies work. They create policy for companies. Lobbyists write bills for companies.
Yeah.
that if we treat startups as a sector unto itself, it is completely different in every respect, right? The pace of innovation is different. The approach to capital is different. Eric, to your points, right? The needs for infrastructure, a lot of overlap, sure, but even those are different in a lot of respects. And so I'd love to see what Peter shared. I'd love to see the SEC. I'd love to see the SBA. I'd love to see your country, everybody. Just write a policy initiative that recognizes that in everything that we do, we need to have carved out a team or a committee or a governance body of specialists in startups to address the unique challenges and distinctions that are different from all of the other work that we're trying to do through the government. Because there's overlap in workforce development, small businesses, and companies. There's overlap. There's a lot of similarities. Startups are not the same. You know, even things like minimum wage is a policy for businesses that can actively employ and pay people. Startups are fundamentally not that. So what do we do about that policy? I'm not saying don't pay people, but you do have to appreciate that we have to approach that form of work in these kind of companies in a very different way.
Yeah.
Gil, any final thoughts, and we'll wrap up.
No, I mean, look, it's up to folks like us, and whether we like it or not, we are the experts because we're doing it real time. And a lot of folks have not done this before. And when we say done this, started a business, whether it's a restaurant, a VC-backed company, you know, service-based business. So the more that we collectively engage with one another, and then just engage folks that are the policymakers, and even the capital markets to some degree, and investment community, I think it's going to create a better ecosystem for all. And I'm optimistic about it. This is the best time to start and run a business. Very low barriers to entry. I'm very optimistic about it. So reach out. I want to be a resource to what extent I can. Obviously, FI is worldwide. Reach out and, let's keep plugging away on this and having this conversation.
Cheers to that. Grab us, everybody. Grab us on LinkedIn for sure. On February 3rd is our next event. So put February 3rd on your calendar, next related event. Of course, Founder Institute does hundreds of events. Talking about this context of economic development and policy, our next event is going to be on February 3rd. You can find that on fi.co, or certainly get on LinkedIn on the Founder Institute page there. Even if you just connect with me or Gil, we'll all make sure you're aware of this kind of stuff as it comes out for sure. Thank you very much for your time, Gil. And by the way, as we wrap up, Ryan, yes, you can get one of these hats. I'm actively fundraising for my first venture fund. And so everybody who contributes $500,000 to my venture capital fund gets a free hat. So if you want one, ping me and we'll get that off the ground. Thanks, everybody.
Thanks, everyone.
Keep up the good work and get in touch. Okay. Cheers.
Take care.